Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the low time frame bullish scenario where we're looking for a double 1-2 to the upside with new highs to come. Preferably in a double 1-2, the lower degree 1 and the lower degree wave 2 are shorter in time and price compared to the first wave 1 and the first wave 2, which is a higher degree 1 and 2. So in green we have a 1, 2, 3, 4, 5, and then inside wave 3 we have the blue count being a 1, 2, 3, 4, and then eventually a wave 5. So preferably this wave 1 is shorter in price and time. Now it's shorter in time, but it is a little bit longer in price as it over here tapped the 1-to-1 taken from the low to the high of the first green one to then the low of 2 over here, which is a little less common, not really something you like to see, but okay, it's just by a little wick, so it might get away with it. Then over here, this wave 2 preferably is shorter than the 1 fib time that I have on my chart, sitting on the 8th of October, Sunday, 10 a.m. Central European time, which is a trend-based fib extension taken from the high of 1 to the low of 2, and then you put it on the high of this one to compare the time of the green 2 with the time of the blue 2. Now also, then preferably, this blue 2 is shorter in time than this green line. The moment it passes the green line and we did not take this high yet, probabilities are going to be decreasing for a double 1-2. Also for this wave 2, most commonly targets are the 0.5 to the 786. 0.5 has been hit over here and very nicely respected, as you can see on the 4-hour chart. Lowest target 786 for a wave 2 at 26.5k. Another scenario that was posted in the group this morning by Dasa Gaming is a scenario I sometimes here and there put on my chart, but I thought it was interesting to speak about it again after he shared his picture over here. So this is what he shared in the group. Thank you, Dasa, for a wave 1, 2, 3, 4, 5. So a diagonal structure over here where he has 1, 2, 3, 4, 5 as a count, but alternatively you also see over here wave A, wave B, and then a wave C, but an A, B, C is then going to be a 5, 3, 5, and then inside, if this is A, B, C, then wave C by itself has to be a diagonal structure, right? But the scenario that I took over here from the chart is the 1, 2, 3, 4, 5 scenario. So over here, all the waves are zigzags in this leading diagonal. So we have a wave 1 being a zigzag, ABC. Wave 2 is a double zigzag, WXY, which is possible. All of these waves over here have to be part of the zigzag family, but that also means they can be single, double, or even triple zigzags. So wave 2 over here, double zigzag, it hit the 0.5 Fibonacci taken from the low to the high of 1, which is a little less common for a wave 2 in a diagonal. Most commonly are the golden pocket to the 786, but that's okay. Then over here, he put another ABC on the chart for the high of a 3. Then eventually 4 and 5, right? Now, this wave 3, that is where the things start happening, because this wave 3 is a little bit longer as this wave 1. It's the same concept, but preferably in a diagonal, wave 1 is the longest wave, and wave 3 is a shorter wave compared to wave 1. Most commonly, the target for a wave 3 in a contracting diagonal is between the 886 and the 786. Now you can see we have a wick that goes above and hits the 1-to-1 over here, which is an invalidation for a contracting diagonal. So that is important, but then again, it just hit it, it just wicked into it. You know, can it get away with it? Well, it's at least a scenario we can keep in mind. But if we look inside of this wave 3, in an ABC, we want to see zigzags. So let's go to the 1 hour. If this is the ABC on the chart, then this wave A has to be 5, 3, and another 5. Counting 5 waves in this wave A becomes quite complex. 1, 2, 3, 4, 5. Okay, maybe possible, but some charts took this low. So if you count 1, 2, 3, 4, very deep 4, 5, some charts took this low, meaning wave 4 is lower than wave 2. Which is not allowed, right? So that is not really a possibility, but counting this as a 1, 2, 3, we don't have a 4, which means then this wave A is not a 5-waver, right? It's more like a 3-wave structure, which means we could have another WXY double zigzag, right? So we can have an ABC and then a W wave X, and then over here you could have an A, B, and potentially a C, or an A, B, and then 1, 2, 3, 4, 5 for C, or something like that, right? That is the subdegree count of 3, which is more complex. So I would remove the A, and potentially over here you then have to do a WXY to get to a double zigzag structure in wave 3. You know, we keep in mind the 1-to-1 has been tagged. Now for wave 4, you also then want to see zigzag structures to the downside, and we do have one over here, which I'll show in a lot of detail in a second. For a wave 4, most common target 05 and the 382 over here. Now the 05 has been hit, golden pocket a little more rare, it's orange, and most rare are the 786 and the 886. Now, of course, a wave 4 can also still be a more complex structure like this. That is something we definitely at least have to keep in mind. For now, though, price did hit our target box very nicely indeed, and from there it is moving towards the upside. Now, if you then zoom in to this structure over here, right, and let's have a look at, like, could this be finished? Could we have upside? The yes, the no. Well, of course, there's always probability, so there's always a probability for yes and always a probability for no. But what you can see is that I've now got a messy chart for once. So over here, this morning, I tried counting this move to the downside over here together with Linus in Discord. So we were active trying to get, like, make sense of this structure. So thanks for engaging with me in Discord, mate. And 1, 2, 3, 4, 5, that's a valid impulsive structure in an A. Then you have a B, potential 3-way flat over here, and then B for then a very long sideways wave C. Now, most commonly a wave C takes longer than A, so you know that works, I suppose. It is very, very long. But if we then zoom into the 5, you can see that for this wave C, we could then have an ending diagonal. And for an ending diagonal, all the waves have to be 3-wave structures in 1, 2, 3, 4, and eventually a wave 5, right? So in this ending diagonal, we then have an ABC in a wave 1, ABC in 2, ABC 3, 4, and eventually a wave 5, finishing a diagonal, which you can see here by using the red lines. So this could be a very valid diagonal over here for then the end of the green ABC. And then the question is this the low or is this a wave W? Are we going up impulsively for a new local high, taking the high over here at 28.6K, or should we be looking for potentially another WXY with possibly another Y to the downside and maybe even again a double zigzag, right? That's the question. Now, I have a folder here for you, which is about this particular question. Do we have an impulse from the low here towards the upside? Well, let's go through the different scenarios. A regular impulse is a 1, 2, long 3, sideways 4, 5, right? Now you can see there's a lot of overlap here and we can't count a regular impulse in a 3, 4, 5. Everything is very, very overlapping, and wave 1 and 4 are not allowed to overlap, but this does not look like an impulse. Now, if we then look at a diagonal structure, right, where we then have, for example, over here, a 1, 2, 3, 4, 5. So this could then be a 1, then you have a wave 2, no? Then potentially another 3, 4, and then a wave 5. Okay, right, maybe. But if we connect the dots over here, so if I put some trend lines on, this one is expanding. That's never preferred. Or later, let's take another high, right? Take that high, take this low. Well, now the problem is, if this is a wave 1 in a diagonal, zigzag, and this is a 2, this 2 is like an expanding flat type of structure, not allowed. So we have to move it up a high. But you consistently see, this is still over here, even if I connect these two, it's still an expanding diagonal, which is not what you want to see in a diagonal, because by far most commonly are contracting diagonals, right, and not expanding diagonals. These are more rare, so you know the probabilities automatically go down for this type of scenario. But potentially over here, then like a 1, a 2, or a 1, like 1, 2, this is a first structure, second structure, third structure, fourth, or 5, maybe, but it doesn't look too great just yet. And then over here, a double 1, 2. Well, for a double 1, 2, you also preferably have a diagonal structure, and counting over here, double 1, 2s is also again a little bit complex. You have to maybe think like 1, 2, 3, 4, 5 again, right? This being your first diagonal. So this is your wave 1. This is your zigzag wave 2. This is then over here your wave 3, 4, and your wave 5. But then, of course, again, and I just shown it, then you get these trend lines over here, where again you are having an expanding structure if you connect the highs and the lows, which is not really preferred in a double 1-2, and preferably actually we also have some bullish CVD divergences here between the lows. Now we do have a bullish CVD here between this low and the higher low, as you can see, but not actually with the actual low, but still it is a bullish CVD divergence where the target is this one and should be taken into account. So locally for the bulls, this could be a potential scenario for then a 1, 2, 3, 4, and maybe eventually a wave 5 to the upside. But that means that over here you're going to have somewhere your end of a wave 5, right? And if you take a trend-based fib extension from the high or the low of 1 to the high of 1 to the low of wave 2, then also here once more, that's also the reason why it's expanding, the 1-to-1 has been hit for a potential diagonal. That's not what we want to see. And if we would count this as a wave 1, again 2, and then a 3, 4, 5, then we have overlap between 1 and 4, and that's not allowed in a regular impulse. So basically the summary is counting an impulse from the low here is very complex. It's very difficult to count a solid impulsive structure in a double 1-2 diagonal or a regular impulse. And that lowers then the possibility, the probabilities as well for an impulse to the upside, and increases the probabilities that we might see this low taken once more. Now, of course, we do have resistance here, actually very nicely, by the way. The support got hit, the daily naked point of control. Price now moving to the upside. We do have resistance, 28K, 28.3K, and it's about observing the reaction, as always, right? Of course, price can just pump towards the upside. It can take this high. It's been an ABC structure. If we count this on a very low time frame, there's quite a nice probability this is an ABC. So this could be the end of potentially a diagonal 4, and you could continue, even though this move doesn't really look that great yet. But it's always about reacting to price. What do you see on the chart that gives you the confidence for a potential short position here? Do we have confluence? Yes, but what are other stuff that you're going to be looking for? Trade your plan, look for your entry requirements, and then just enter. And then maybe it's a loss, maybe it's a win, but you stuck to your plan. Now, for considering the divergences, the bullish divergences were already explained, but potentially we might get some bearish CVD divergences over here. So if I actually show you the bullish ones first, higher low in price, and then on blue, lower low on blue. So keep an eye on my horizontal cursor line over here. Look to the right now, and you will see the blue line dipped below my horizontal line. So that's a bullish CVD divergence, higher low in price, lower low in CVD. Not with the actual low though, a little bit of an in-between low, but it can still play out, right, and take this high, something to at least be aware of, and that's what I'm doing in these videos, of course. I'm making you aware of the movement of price and CVD. But if you look at the yellow line, then you could potentially reach a bearish CVD divergence if price continues a bit higher to resistance, to the daily naked point of control 28K or the daily 28K or the daily naked point of control at 28.3K, lower high in price, and then potentially you might get a higher high on yellow over here. Of course, we're still far from it, but at least that's something to keep your eyes on, I suppose. So if we then finally look at the probabilities of the different scenarios, then on the low time frame, currently the corrective structures are looking better, like eventually downside. Also actually mentioned in the previous video, that's where we went also more in depth into potentially corrective structures with like the ABC over here, where this is the high and the move down. Like you really start to maybe switch to more bullish scenarios, or like the mindset from an Elliott Wave point of view, if you can flip 29K, which is, you know, we're not yet there, right? So currently at the moment, also based on the previous video and what I showed you at the moment, the corrective structures have a higher probability. The double 1-2, well, the one dot, like the Fibonacci got taken, right? The trend-based fib extension 1, as well as with the diagonal. And on the micro over here, personally, it's interesting to keep an eye on the confluences here, the daily and the daily naked point of control as a right here, move to the upside for then potentially that move to the downside, which from an Elliott Wave point of view has higher probabilities, because over here it's so difficult to count an impulsive structure in either a regular impulse, a diagonal, or a double 1-2. too. So it's always about observing the reactions, as I also write here in the target box. Observe the reaction at the daily naked point of control, but this from an Elliott Wave point of view is the probability. So I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.